You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back. It is time once again to talk about some futures options. It is time once again for TWIFO. My name, of course, Mark Longo from theoptionsinsider.com, as well as on the network that so many of you are enjoying. Hopefully you're enjoying the Futures Rundown, very much the sister program to this one, airing on Wednesdays. Yet another reason you should be listening to the full network. And of course, if you want to go above and beyond, you want to join us live to heckle all of our co-hosts, chat with the folks, get exclusive shows like Oddities, Pro Q&As, and win fantastic prizes like our Pro Trading Crate winner, Mr. Unlimited, did earlier this week. Only one place to go to do all that, theoptionsinsider.com/pro is the place to go. If you sign up there, that will also get you my cohort here, Mr. Dan the Man's Gramza's personal cell phone number, so you can call him anytime, day or night, with your detailed questions about futures options trading. He especially appreciates it when you call him at 2 a.m. with your Nat Gas overnight questions. He loves that. Of course, I'm talking about none other than Dan the Man Gramza from Gramza Capital Management. Dan, welcome back to the show. And how appreciative are you of those 2 a.m. calls about Nat Gas, sir? I think you're muted, sir.
Helpful. There we go.
You're so excited.
I'm not sure
you
about the
so
2
hard,
o'clock.
You muted yourself.
The 2 o'clock call, but if it helps somebody, I'm happy to do it.
There we go. So look forward to Dan's personal cell phone number the second you sign up over there at the Pro. Meanwhile, listeners, we'll keep on rolling into a little bit of the old moving and shaking.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
And welcome to the Movers and Shakers, the portion of the show where we tell you what was lighting it up to the light side and to the dark side over there at CME Group this week. And Dan, I may have created a monster. I was just joking, but now all the people in our Pro Chat, they want your cell phone number, Mr. Dan. So they want to call you at 2 a.m. So I have created a beast. I do apologize, sir. Tell your wife when your phone starts ringing off the hook at 2 a.m. It's like, it's that darn Longo guy again.
Right.
All right. In the meantime, Mr. Dan, you think you could handle walking our folks who want to call you at 2 a.m. through a little bit of light side and dark side?
Sure. Be my pleasure. Well, why don't we start with the light side? And what's interesting is the mix that we have. Number 5 is healthcare. That's up 3.53%. Number 4, communication. That's up 3.88%. Number 3, the Nikkei, up 4.21%. Number 2, soybeans, not surprising, up 4.76%, and palladium, that's up 8.88%. How about that? Not too surprising with palladium either, just because of the way that trades. Getting percentage moves isn't too surprising. Now, let's go to the dark side. Number 5, corn. Number 4, corn, it's down 2.54%. Number 4, we have wheat, and that's soft red wheat. It's at down 3.09%. And then we have hard red winter wheat. That's down 3.4%. And we have lumber down 6.2%. And Nat Gas is the leader of the pack to the downside of 7.56%.
Well done, Mr. Dan. It's like you've done this before or something out here. I'm just looking really quickly. I know some of our listeners from yesterday on the Futures Rundown might be wondering where ETH is. ETH was dominating our weekly upside last week. And there is, of course, a listed big and micro future over there at CME. I'm looking, I see Bitcoin on this chart. I don't see ETH. I'll have to dig in a little bit, unless maybe it got buried here, or maybe sometimes with some of the newer, and I know ETH isn't that new of a product. Sometimes with the newer products, you have to go in and manually add them into the chart themselves. So we might have to go re-rack that one. But interesting stuff out here nonetheless. ETH's having a good week nonetheless. It's somewhere up there in this 4 to 8% upside range this week. So an interesting week out there, Mr. Dan. You know what else we're missing on the crypto front here, Dan, is there's no CVOL for the crypto complex. They may have to get on that over there at CME. You know, we have a CVOL for everything else under the sun, but nothing for crypto. And given how much is moving lately, we might need one, Mr. Dan. But you know what?
I think you're right.
You can rest your voice, sir. I will walk us through a little bit of CVOL now while you start dealing with all those text messages you're getting, because I just put your cell phone number in our live chat, sir. So you can enjoy that as I run down some CVOL here. All right, to the CVOL we go. Listeners, remember, you can run these reports for yourselves. Just type CME and CVOL into whatever browser you're running out there, and then make sure you set your high-low range to 1 week if you're listening near the show date. And then I like the aggregates tab that shows you kind of every complex in aggregate, because we don't have time to go through literally every product that trades at CME. We like to look at the complexes as a whole. And if we do that, we're starting off in the Treasury yield vol this week at a 91, up about 2.1 points today. That's the only bright spot on the week. It's been down every other day this week, Treasury yield vol. So, you know, an interesting week on the Treasury front. Of course, inflation numbers coming in not as hot as expected, then maybe a little worse than expected on the wholesale side. So a lot of inflation data to crunch this week. A Treasury yield vol having a range of right around 89 to the downside and 96.5 to the upside. So obviously hanging out towards the lower portion of that range right now. The actual price vol in Treasuries looking pretty anemic, 4.87, up 0.11 today. So another one where today is the only uptick we saw all week. The low for the week was 4.76, the high 5.21. Let's keep on rolling out to FX vol. Not usually a complex known as a bastion of volatility. That said, looks pretty spicy next to the Treasuries. It's at a 7.8, so nearly 3 points above where the Treasuries are hanging out right now. Unlike the Treasuries, it's been red all week. That is the low print for the week, the high 8.39, so coming in over half a point in FX vol this week, which is a big move when you're starting around an 8 vol. And then going down to the ag products, 19.61 is where we're hanging out at showtime. That is the low for the week, the high 20.64, so coming off 1.03 points on the week. So ag vol coming in a wee bit this week as well. Let's get to the metals, see what's cooking in the metals, listeners. 17 even. We don't see that very often in the C-vol. Off about a quarter of a point today. That is the low print for the week. The high 20.93, so almost a 21. So metals vol coming in nearly 4 points this week. They annihilated vol kind of across the board this week. Just look at VIX if you want to see a broad indication of vol getting taken to the woodshed. But obviously equity vol not alone in that annihilation. We talked about treasuries. We talked about FX and metals. 4 points is a lot in the metals vol, listeners. To the commodities we go. The aggregate commodities C-vol 33.68, off about 0.7 today. That is the low print for the week. The high 34.70. So aggregate commodities vol only, I say in air quotes, only coming in about a point, but still coming in at the low end of its range right now. And energy bucking the trend, a 50.42, coming in about a point today, but actually having a higher print earlier in the week of 51.45. So one of the few that is coming into showtime towards the higher end of its weekly range. The low was right around 49. So again, 50.42 today. So a lot of wild stuff on the vol front. Dan, we talked a lot of stuff in the moving and shaking. We talked a lot of stuff in the vol. Where do you think we should begin our journey this week? What is catching your eye, sir?
Well, with the numbers that have come out, I would think that we might want to start with equities.
All right, sir. To the land of equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. Welcome to the wonderful world of equities. You know where to go to run these reports for yourselves and follow along with the show. CMEgroup.com/TWIFO, TWIFO is the place to go. Then we're going to go to asset class. You're going to scroll down 4 slots to equity indexes. Then the product family, top of the list, U.S. Index E-mini. And we could talk all of them, S&P, NASDAQ. I do want to spend a little time talking about the Russell 2000 this week as well, just because it has been putting up some wild numbers out there in IWM and related products. Be interesting to see if they are doing so in the rut, and looks like the answer is yes right now. So a wild time in the equities. Of course, Mr. Dan, we had some inflation numbers. Inflation giveth and inflation taketh away this week. It gave earlier this week when it came in bad, but not quite as bad as maybe some feared. So that fueled all the belief in the endless rate cuts people are expecting from the Fed. Then the wholesale numbers coming in today, a little bit hotter than anticipated, maybe saying people pumped the brakes a little bit. We saw a bit of a sell-off and vol coming back a little bit today as a result. So 2 sides of the inflation coin this week, sir. What was catching your eye?
Well, I totally agree with your assessment. Plus, we have the Friday meeting in Alaska, which also it's tempered by what we're seeing here. And I think the structures that we're looking at in the S&P and the NASDAQ and the Dow, the Russell is a different animal. We can talk about that, but if we go to the S&P, it's what I call a neutral zone trade. We saw rejection yesterday morning on the highs, and we saw rejection at the lows in today's action. Then what that does is it sets up uncertainty. The market, I think, is in a neutral stance going into the Russia-U.S. meeting on Friday. And the thing about that on the meeting, what Trump has said, it's the first of 2 meetings. Second meeting meaning that Ukraine needs to be at the table. But the market is taking an interesting stance from my point of view. It's a wait and see position. It's 50-50. We could easily go up or down in that market. If you look at in the S&P, same thing in the NASDAQ market. The bias for these, it's to the upside, but the near-term structure is neutral. I feel the same way about the Dow. That softened a bit, a little bouncy today on the lows, but it implies kind of a neutral stance, wait and see. The one that had the most dramatic response is the one that you mentioned, Mark, and that's the Russell. It's what I call an equal and opposite. As fast as we went up yesterday, we came down today. As you said, the market giveth and the market taketh. And that's a good example of that. The sum of yesterday and today, it would be a rejection type setup. And the Russell has finally started to lead the way. It technically isn't an uptrend. And the structure that we're seeing, again, is a wait and see type behavior. And we've had some numbers, as you mentioned, that can create some concern. The CPI and the PPI and how it interprets that, what it expects from the Fed. We know that stock markets are forward thinking. If you look at other data reports, they say that's fine, but that's yesterday's information. Tell me about the future. What do the earnings look like? Am I going to get paid my dividend? Will the Fed support this marketplace? And that's really where the focus is as well. The expectation for September to have a rate cut of 25 basis points. And some people are saying it should be 50, which I don't think it should be. But 25 basis point is the expectation. Wouldn't be surprised to see that now, for that number to come out that way from the Fed. The tricky bit, and this isn't new, but when the president and the Fed have different points of view, and the president tries to put pressure on the Fed, like Trump is doing now and other presidents have done in the past. The tricky bit is if the Fed does something, are they doing it because of presidential pressure? They don't want it to look that way because that means they're acquiescing to a political pressure. But they may want to reduce them because the economic support that unemployment, the inflation support a change. And I think that's where that can kind of become a political or a concerning decision if you're the Fed. But right now, it looks like the pathway is cleared to expect that lower interest rate. If they don't, and if we think we have volatility right now, that would really be a kick in volatility. But right now, I'm looking at a neutral position. Friday, by the way, I don't expect anything earth-shattering on Friday. If they come out and say, yeah, we should have a second meeting and Russia's really interested, but what they say and what they do are two different things. So I think that's why we see this neutral stance in the equity market.
Let's check out those equity markets, shall we, listeners? Out to the S&P. Is it spicy this week? Yeah, you get some inflation numbers, you get a little bit of whipsaw action. That usually tends to drive some paper. And the E-mini putting up over about 3.1 million contracts. So decently active in what is normally the dog days of summer. Not much going on out here, listeners. And again, once you filter through the noise of all the just downside put front month nonsense or front day nonsense, 5,400 puts, the hottest, most active contract, actually 53 half puts expiring in 4 days, going up 100,000 times this week. So once you filter through that noise, listeners, as expected, you have a lot of zero day, and it seems like it's aggregated mostly to the upside. 6,500s seem to be where the action is this week. The contract expiring today has looks like about 18,600 going up this week, actually almost half of that, about 8,000 going up today, 5,800 yesterday, and then, of course, going out one day, you have about 17,000 of those trading, and those have been pretty active today as well, nearly 10,000 of these 6,500s going up today. So that's obviously a number people are eyeballing, not quite getting there today, but maybe by tomorrow, some folks thinking we can get another lift. I mean, this market has been running 6,500s, listeners. You like those? But if you actually dig beyond the noise and beyond the madness of the near-dated stuff, and of course also beyond the puts that are expiring in a day or two, going up 100,000 times at a clip. The actual most active contract in the E-mini this week is actually going all the way out. Dan, this is wild to even say. It's the 6,100 puts going out in October. 78 days out. That's an eternity in modern equities, listeners. They've changed hands 38,000 times this week. So that actually is your big boy. 6,100 looks like it might be a 6,100, 5,800, so a 300 handle vertical, Dan. Went up about 17,000 times on Tuesday and almost 21,000 times on Monday, opening on both days. So we got a total of about 38,000. I'll have to dig up a price, Dan, but October 6,100, 5,800, a put vertical. Does that float your boat, sir?
I know, actually. I don't have that attitude. Very interesting.
I can see you shaking your
October.
head when I said it. I love it. I could tell when Dan's just not into a trade. He's like, I don't like that at all.
Yeah, no, it doesn't float my boat. I'm just trying to think, though, what would be the reasons that someone would look that far out and pump that much action into that vertical? And I'm trying to think of, are there economic reasons that we could expect that type of movement? Is that impossible? No. Is it probable? I would say no. I don't see, at least not now, unless something does happen tomorrow and in the future that was not contemplated. But I don't see us revisiting those levels.
Listeners, you like that 6,100, 5,800 October put spread going out about 78 days or so? Again, I don't have a price on that, but interesting 300 handle, hedging a little bit of downside out there if they are indeed buying it. Intriguing stuff. Since I mentioned Russell 2000 having a wild week, I do want to delve into them really quickly. And volume-wise, again, it's not the E-mini. He's not going to put up 3 million contracts, but we've been talking about Russell 2000 on the show for a long time. It used to struggle to do 5 or 10,000 contracts. So 75,000 contracts in the rut is an actually pretty active week, which should be intriguing to a lot of you out there. If you've been, thinking about dipping your toes in small caps and maybe IWM not doing it for you for whatever reason, you're getting a lot more liquidity and a lot more action here in the small caps, which will make it easier for you to get in and get out at the end of the day. And of that 75,000, like most equities these days, 31% of that is going up, I should say, in the contract that goes away in one day. If you add in the paper from today, you're talking about 39, almost 40%. So Russell 2000 is not immune to the trends. It just usually bucks them, usually goes a little bit farther out. But actually right now, Russell 2000 coming in and started this show at a little bit north of 2,300, and the 23 half calls were dominating the tape, going up about 4,500 times this week. Seemed like they were trading actively all week long. The big day was actually Tuesday, 2000. Looks like there might have been a roll from the 2,300s up to the 23 halves, about 2,300 of each going up, closing on the 2,300. So if that's the case, it makes some sense. You're making some money on the 2,300s. Whether you want to keep them going all the way up to the 23 halves, or if that's putting on bad money, I should say, after good, then I'll leave that up to you to decide. But doesn't look that great right now. But either way, looks like they bailed on them on maybe Wednesday, though. They took them off on Wednesday, so maybe the rest today. So maybe they did their roll on Tuesday and then maybe thought the better of it the rest of the week. Either way, they are weeklies, so you don't have much time to get the heck out of Dodge. But it seems like that was the big trade out here in small caps. Usually, if we scroll a little bit farther out, usually there's some longer term. And usually it's downside in small caps that's leading the dance. I'm not seeing that this week. I'm seeing 2,400s in September going up about 1,000 times, and 2,400s going away in about early September, 22 days, also going up about 1,000 times. So seems like upside is the order of the day. There's nearly 1,000 of the 2,500s that go away in about 47 days. 2,300, so kind of at the money's in 15 days, about 1,000 of those. So, Dan, we got a lot of upside, and in general, just a wild week from a volume perspective in small caps. Anything catching your eye out there this week, sir?
Yeah, I think what stimulated some of those numbers that you just went through are not so much today, but the two previous days. You know, the small to mid caps, the Russell, people forget, I think, sometimes that that can lead the way when it comes to stock indices. Usually, especially if the economy is slowing, because small to mid cap companies can be more responsive quicker or faster than what we see with large cap stocks. So that movement we had last couple of days, very energetic. It has not been the behavior that we've seen for months in this indice. So I think people thought, hey, maybe this is a change in attitude. Yesterday, with its close, it would be a technical uptrend from a technical analysis point of view. Today, it backed it off. It basically wiped out yesterday's range. And so it's showing us rejection as it rallied. The issue, though, is how it's positioning itself. And I still look for an inside day for Friday until we get some news coming out of Alaska. And retail sales will be coming out. But how do people feel about any of these indices going into the weekend? And I think that's the last barometer that you and I should be thinking about. So, do we finish with strength? Do people say, I'm willing to hold the Russell going into the weekend? Or does it really back off tomorrow and people say, well, whatever I had in this trade, I want it. I'm not going into the weekend long or short. Tomorrow's action will give us clues to that behavior. So the Russell really is different than what we're seeing with the other indices.
All right, Mr. Dan, let's keep on rolling. It's been the hot dog in a lot of our other shows this week. Obviously, the crypto rundown, but it also kind of dominated the tape on the futures rundown yesterday as well. So I think we'd be remiss if we didn't at least take a quick sojourn into crypto next.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, everybody, welcome to the ever controversial world of crypto. If you want to find it for yourselves, go into that same report, go in the asset class, pop out of equities, go up 2 slots to cryptocurrencies. Then you'll see product family indexes and then indexes micro. We're going to hang out in the big first, but we can look at the micro as well. Dan, by the way, I did some checking during the show, and the reason ETH doesn't show up on our scans, whatever reason, CME doesn't enable it on that chart. They put Bitcoin in there, but they will not allow you to compare ETH, sir. So no, ETH or Solana are not options. Otherwise, I do believe ETH would have been somewhere in our light side. So everyone was going to write in saying, where was ETH on your movers and shakers? Save your email, listeners. It is just, for whatever reason, not an option to be included on that chart over there at CME. We could talk Bitcoin, but not ETH. But Dan, we were talking yesterday on our futures rundown program with our guest, just the absolutely wild resurgence that has come on the Ethereum front. I mean, it was our number one worst performing product of the year just a few months ago. It has now swung completely in the other direction. Now, not only is it in the red, it's in the green, and it's at the top of the green for the year. We've never seen a product do that before, at least in the run of that show. That show hasn't been on that long, but still, it's an impressive move out there, Dan. And we're seeing some decent paper as a result as well. I mean, it takes a while sometimes for these products to generate some options paper, and we've been waiting and wondering for a while whether these crypto products at CME were going to gain some traction. Who knew? All it took was a explosive move to generate a little bit of flow. About 1,000 contracts going up in the big ETH options this week, which again doesn't sound like a lot, and it's not, but historically for this product that can put up 20 contracts in a week, nearly 1,000, that's a banger week. So that is something to certainly keep an eye on. By the way, the big dog out here looks like it's the 4,000 calls going out in about 15 days, as well as about the 5,600s. Wow, that's an interesting strike. They went up about 50 times each, which again doesn't sound like a lot, but that's a big trade for ETH, and that's also 1,000 handles out of the money. That's a SEP contract expiring in about 43 days. Worth noting, it's not all upside. Also have some 4,400 puts going up in October, 78 days to go, about 50 of those as well. So interesting smattering, but it does look like it's biased to the upside. And then if we look at the micro, which is where most of you, I think, would be hanging out on the ETH front, because that big ETH contract is pretty big. You're talking about 8,000 contract, which again is a decent day and a decent week, I should say, here for all things micro ETH. And on the micro ETH front, it seems like it's kind of a little bit more diverse paper. 4,800s going out in about 15 days appear to be leading the dance with about 400. Actually, I take that back. It's 5,600s again. Somebody has an axe to grind on that 5,600 strike in September, going away in about 43 days. They put up about 500 of the micros as well. So I don't know, listeners, can we put up 1,000 handles in 43 days in ETH? We did it in a lot less than that just a few weeks. So that's an interesting trade. Dan, I know you're not the biggest crypto guy, but this week has been kind of wild. Looks like, by the way, those 5,600s on the micros, all of them went up today, all opening. So somebody's got a big axe to grind 1,000 handles out of the money in ETH, Mr. Dan. And it's hard to say they're wrong given the move we just had, sir.
Well, you're right. If you look at the last 3 or 4 days, we could cover that. It's hard to imagine that. However, from strictly a technical point of view, what we've seen over the last few days, last 6, 7, or maybe about 7 days, is a market that has what's referred to as a V bottom. And what you have in that is you have directional volatility. So we did what you said, Mark. We fell through around 4,200, and we broke down to like 1,500. Below that, even we broke to the downside, almost vertical. In a few days, we covered that range. What's interesting is the way we hit the bottom. When we hit the bottom, it was bouncy. Buyers came right back in. Now, when you have a market that moves vertical or close to vertical, so that's like a 70 or 80 degree move. If you have that type of move, you look for it to go out that way. So we came in dramatically to the downside. Vertical moves or near vertical moves are very difficult for a market to sustain it. Doesn't mean it can't move a lot. It's just difficult to sustain it. So that's what we saw here. It broke to the downside, got to those lows, buyers came back in, and they immediately followed through. So what we've done in the last 4 days is huge. It's faster than it was going down. So, and when you see that kind of movement, you look for the second leg to be longer than the first leg. And that's what we have here. We exceeded when we were breaking to the downside that previous high, and that was around 4,200. So we exceeded that coming back up. That fits the criteria for that type of technical move. Now, is it going to be sustainable? 5,600. Wow. That does surprise me. 5,200 or 5,500 or less than that. 5,200, yes, that's reasonable. We could do that in the next couple days. But that really is interesting about someone's outlook for this market. But as you said, Mark, it's not totally out of the question. If you think about where we've come from in just the last 4 days, I mean, we were down at 1,400 and we're trading 4,200 now. No, more than that, 4,700 now. So that was a pretty sizable move in just a few days. So does it have the potential to move to that 5,600? Yes. We want to remember it's gone almost vertical. Difficult to sustain, but we could have a lot of volatility. So the thing I would be looking at is how do we move higher if we do Do we go home over the weekend with the nice strong close? Or do we go into the weekend with this market backing off, which means people are taking profits, or we got high enough to find sellers? So it's a very interesting structure, I think, that we have right now. I can tell you from a long point of view, you don't want to see this market trading below 4,000 tomorrow or closing below 4,000 tomorrow. That implies a down move next week. So it's why it's here, who knows? Fundamentally, I think it's hard to tie that to anything, but price action really is interesting in that market.
Yeah, it's been fascinating to watch. Even if you're not a crypto head, listeners, maybe you hate the asset class, just the volume has been ridiculous. We were talking yesterday, Dan, on our futures rundown program. You know how we break down the most actives for the day. I've never seen a crypto product in our top 10 until yesterday. Ether Micro breaking into the top 10, nearly 300,000 futures changing hands. So folks are out there slinging these things these days. They are trading up a storm. By the way, I forgot that they've added, obviously they have Solana. They've also added XRP over there at CME, Dan. So you have your choices now in terms of underlyings to trade some listed futures and hopefully some options on over there at CME as well. So if you don't like the counterparty risk of slinging spot, CME's got a couple options for you. All right, Dan, we did our little legally obligated sojourn into crypto. It's hard to ignore on a week like this. Where should we head next, sir?
Well, interest rates are interesting just because of everything that's been happening fundamentally. Currencies are interesting. The dollar, today, the dollar is stronger across the board in the currencies. And interest rates, as fast as we went up, we came down. And they're very neutral. Bias is for prices to move higher in the interest rate markets. Hey, we haven't talked about metals or energy. Shall we take a peek at one of those?
All right, sir, we can do that. So let's take a sojourn into energy. Here we go.
It's time to tap into the deep options well of black gold, Texas tea, Nat Gas, and more. It's time to talk energy.
All right, listeners, pop into that asset class drop down. Go down from crypto. You're going to go down. That's right. Only one slot to energy. Then we're going to go to our old pal Nat Gas. Dan, I think it's a statement of how weird and wild and interesting these markets have been of late. That we haven't talked energy on the show in a while. Usually Nat Gas is a regular offender on the show, and this week it's certainly living up to its name. Number one to the dark side, off 7.5%. So a wild week for Nat Gas. Let's see if it's living up to the hype from a volume perspective, listeners. And the answer is yeah, it's doing pretty well. 882,000 contracts. So closing in on 1 million contracts this week, listeners. Nat Gas, as we're kicking off the show, shy of the 3 handle again, which when it was hanging out around 3.5 heading into the summer, it seemed wrong to me. The market agreed, crushing Nat Gas, crushing it yet again, back below the 3 handle, off about 16 cents just this week, or 5.5%. Obviously, you go back to the end of our show last week, it's off about 7.5%. And of that, about nearly 900,000 contracts on the tape. About a third of that is going up in the SEP contract, has about 12 days to go. So we will hang out there. I mentioned energy vol coming back to earth a little bit this week, and that is the case, but not much. We're seeing Nat Gas vol at about a 55, a little bit shy of that, 54.90, off about a point, which again, if you know Nat Gas, that's actually starting to get fairly low. So interesting. We've seen Nat Gas easily spend time and get up to the triple digits. It doesn't take much to get there. And it's usually hanging out at a 65 or above. So 55 is starting to get fairly anemic from a Nat Gas perspective. Not to say it can't hang out here for a little bit, but just something to bear in mind if you're harvesting the old risk premium. Skew-wise, not much evolution going on over the past week. The puts were 3.5% bid. They're still about that same level. And the calls are about 2.4% cheap. Still about that same level. So the skew hasn't budged at all over this past week, which is kind of interesting. And the big dog out there, like I said, we're broken through the 3 strike. It's not the 2 3/4 puts, though. It's actually the 2 half puts that appear to be leading the dance in September, going up about 30, almost 31,000 times. And, actually, I take it back. That isn't the most active contract. It's actually have to go out a little bit farther for that. It's the 2 half puts in October. They have about 42 days to go. They've gone up about 33,000 times this week. So ever so slightly taking the top spot. Opening all week long. The big day was Tuesday, about 18,000 going up on Tuesday. Nearly 8,000 yesterday, 2,300 on Monday, and a little bit shy of 5,000 today. The OI on that strike is about 72,000. So a lot of paper on those 2 half puts. Mr. Dan, what is catching your eye in yet another red week for the Widowmaker, sir?
Well, I think fundamentally it makes sense. You're right. Last few days, we really have broken down from, almost 315 down to 275. But we got a lot of nat gas. That's the bottom line. Production looks good. Inventory build is higher. Demand just hasn't been there. And you think about the goofy weather that we've had in the United States, that alone would stimulate nat gas. And I think a lot of people have been counting on that because it would be logical. If we think about temperature, we've had some hot weather. And so people turn on air conditioners. That means they need more electricity. And we produce more electricity in our country with nat gas than we do with any other source. Coal, nat gas burns 60% cleaner. One of the reasons, and plus the price level is such that it's cheaper. Or actually, a while ago, they've done this. Utilities switched to nat gas. And we're just not seeing that demand soaking up the supply we have here. We're seeing some exports starting to increase, but nothing to really light the fire, no pun intended. And what we're seeing here right now is neutral. It implies a sideways move here. It's cheap. It's cheap. But the bias is for further weakness right now, unless we see something, and it's the demand side that we need to see in nat gas, not only to begin a move to the upside, but to sustain it. And what would that mean? That would mean we'd want to be above where we are now. We'd want to be above 285 going into the weekend. And we'd want to be above $3 actually by Wednesday of next week. That means we now have a market going up the way it came down. And that balance is important if you're going to get a sustained move. If we don't see that, if we do maybe close a little stronger tomorrow, and we don't get that kind of move to the upside, look for a sideways move more than another move to the downside. That would be expected behavior over the next couple weeks. And, we got this conference happening tomorrow in Alaska, that may have some impact on the energy front or the perception of what it means.
That's true. They are meeting in oil territory. I'm sure it's not an accident out there, Mr. Dan. So interesting stuff out there. We've got time to squeeze in one more complex, Mr. Dan. Where do you think we should leave the folks this week?
Gosh. Well, wait a minute. How about if we just take a minute and talk about crude oil?
Oh, yeah. Let's do that. Since we are in the energy complex, let's do that, Dan. Let's be equal opportunity here in the energy complex. All right, listeners, pop out of that drop down. You're going to go up in the product family all the way to the top of the list, the crude oil. And you're going to go to our old pal WTI, hanging out there in Cushing, Oklahoma. Is it a hot week for WTI? Hanging out right around the 64 strike, 64.04 to be precise. Up about 0.25% this week. So not a big week in either direction on the crude front. Let's see, on our weekly chart, yes, from our last show, WTI is almost literally unched, up 0.08%, listeners. So not making it into our movers and shakers this week, but putting up some decent paper this week, actually. Maybe this this Putin summit is leading to a little bit of anticipation. Either way, nearly 600,000 contracts going up in WTI this week. So if we had a volume movers and shakers, a WTI would certainly be up there. We've seen it usually do 400, 450,000 on a normally quiet week. This time of year, that's probably what we would expect. So nearly 600K is nothing to sneeze at. And interestingly enough, volume-wise, we are getting a decent amount of near-dated paper this week, Dan. So looks like a little bit of, not quite 0 day, but let's say 1 day to go. WTI paper is dominating the tape because about 45% of this week's flow is going up there. Again, paper has 1 day to go. Vol at that point is meaningless. But if you look at most of the term structure, the vol seems to be hanging out at around a 32 to a 34, listeners. So just to give you some frame of reference, Nat Gas at about a 55, WTI at about a 62 to 64, depending where you're looking here. On the front, contract is actually the highest at a 64, which is kind of weird. But it's the 60 puts, listeners, going out in exactly a day that are dominating the tape out there today. So near dated put action in WTI. What is this, an equity? But 60 puts, again, almost 31,000 of those going up this week. The big day was actually Monday, closing about 12,000 of them. Opening on Tuesday, 6,000. Closing again on Wednesday, about 8,000. Seems like we have some back and forth action. And today, about 4,300. There's still 26,000 contracts left on this strike. What's a 60 put with 1 day to go in WTI worth right now? Probably not that much. So maybe they're not worth the effort to close out the remaining 26,000. But either way, that's what we got. Number two, we got 27,000 of these 65s. So those have a little bit better chance of coming to fruition. They're less than a point away. They put up about 27, almost 28,000 contracts this week. The big days were Monday and Wednesday, about 7,000 each, both opening those days. Actually, I take it back. Today, putting up about 8,000, 8,200 actually. So slightly exceeding those today. The OI today is coming into today is 19,000. So they could be closing those. They could be rolling the bones on 1 day to go out there with 65s. And about 5,000 on Tuesday, listeners, mostly closing there. So I guess of those two, if you had to roll the bones, you probably want to go 65s, I would think. But still, interesting stuff for a week where WTI is almost unchanged, Dan. What's catching your eye?
Well, on that one, what's interesting is yesterday and today. Yesterday, as we broke down towards 62, got just a tad below it, we bounced right up from that, and we had follow through today. And it could be two things. One, getting ready for the Alaska summit. Two, the U.S. dollar is weaker. And is the U.S. dollar stronger, and you would expect crude oil prices to back off a bit. They haven't. They're a little resilient. Again, it's like the Nat Gas situation. We got a lot of crude oil, and we are exporting it. We're not seeing the demand from China that we've seen in the past. Things are kind of improving there a bit. But the big deal is Russia. What's going to happen now? Trump did try to close down the ghost fleet that Russia had going, which kept its income flowing. Trump has also tried to say to India, here's the deal. You buy Russian oil, we're going to slap you with a heavy tariff. China, India, and trying to think of the third country that are the biggest consumers of Russian oil. And, if you're India, the price for right now, market price theoretically for Russian oil is around 60. And they were offering them a big discount to buy their oil. So if you're India and somebody says, I'll give you 30 off a spot, well, it's hard economically not to take that. So that's going to be interesting to see how that part sorts out. The other issue here, we're at near break-even prices for U.S. crude oil production. If you look at the shale industry, their break-even price for many of them, depending on the debt load, is around $60 a barrel. We're not far from that. Where they need to be to start really making a little profit is 65 to 70. And we're a little ways from that too. So there's that dynamic at play here. And so the sideways move, like you mentioned, for this week, not too surprising because we have all these forces around it that's kind of containing price. So it'll be interesting, again, to see how we finish this week out. Right now, buyers are here in crude. Are they going to be here tomorrow? And a sign that they'd be here tomorrow on the close would be a close above 65. So that 65 handle that you were mentioning, not too surprising to see that if indeed we're going to see a commitment going into the weekend.
All right, Mr. Dan, that music means we survived another sojourn through the world of all things futures options. How was it? Did you have fun, sir?
Always, Mark. It's always fun. You and I are blessed because we get to look at markets that are there's always something moving, which always makes it exciting.
Speaking of fun, Dan, I can't let you get out of here without weighing in on the important issues of the day. And this was actually inspired by our chat on the last show. We got into a discussion of it on our Option Block show. It is live right now as a flash poll on our Twitter. And it is quite simply, Dan, which Rocky movie is the best? Rocky 1, Rocky 2, Rocky 3, or, as I believe, the right choice, Rocky 4. We won't put Rocky 5 in the list because it is not a good film. But that said, Dan, do you have a preference in the Rockies, sir?
Yeah, I'll take Rocky 1.
Oh, original Rocky. Sometimes it's hard to beat the original. And right now,
that was more inspiration.
Half of our audience agrees with you. 50% saying they go for that. 28.6% going Rocky 3, so they like the Clubber Lang story, I believe. Mr. T. That's the one, Mr. T, I do believe.
Yeah.
And then Rocky 4.
That was a good one.
My personal favorite, Dan, Rocky 4. One of the most jingoistic and most 80s East versus West movies that has ever been made. That and Red Dawn kind of vie for the title in my mind. So that, to me, is the right choice. Our audience is going with you, though. Rocky 1, more of a slow burn. You're not getting the Apollo Creed montages and the I Must Break You and all the other great things that happen in Rocky 4. But it just ticked, Dan. Actually, you know what? Rocky 4 lost some percent. Rocky 3 climbing higher, 33 and a third. So people are going for Clubber Lang, I guess, out there. But that'll be live the rest of the day. Unfortunately, if you're listening beyond today, listeners, you won't have a chance to vote. That's why you should be following us over there at Options. You can make your voice heard on these important issues of the day, Dan. And if folks want to follow you and get some important futures information, where should they go? What should they do, sir?
Oh, well, they may want to check out dangramza.com. It's a website I have that has a free video done every day. Of course, if they're interested in the techniques I'm using and the trade management concepts that are with these red and green lines you'll see on charts, they're not buy and sell recommendations, but you can go back over 10 years and you can see how these red and green lines change, sometimes on a daily basis, to see, okay, what was he saying when this happened and how did that get managed if they were long or short. So that's a resource. And we look at 22 different markets. So stock indices, currencies, interest rate, metals, energy, and ag markets. You can provide a reference. If you've never looked at futures, a place to begin is listening to Mark on his shows and watch them. And the videos I provide may be a place to begin also. So you just see how they unfold. And you can look at 22 different markets to see, are they as crazy as people say? Or is there some logic to these markets?
Dan is being modest. I will not. Check him out, Dan Gramza, GRAMZA.com. We call him Dan the Man for a reason. If you like these markets, if you're intrigued by futures, what are you doing if you're not watching his videos? They're not even that long, so you have no excuse, listeners. DanGramza.com, the place to go to kick the tires and light the fires. While you're checking things out online, check out our free TWIFO reports. Again, they cost you nothing. I defy you to get that kind of futures options data for free anywhere else. Trust me, you can't. That's why we created those reports at the end of the day. And they run 24/7, so you can check out fluid milk at 3 a.m. if the mood strikes you on a Saturday, listeners. Start that journey, cmegroup.com/TWIFO. But that's going to end our journey on TWIFO. Not going to end our journey on the network, though. Back again at 3:30 Central to talk some of the hot options that are lighting up the tape out there today on their newest addition to the network, the Hot Options Report. Back again tomorrow, noon Central, 1 p.m. Eastern, to talk all things vol with our buddies Dr. Vix and Ewan Sinclair and maybe some other special guests. We'll see who's going to join us on the show tomorrow. And then, of course, Options Oddities after that. Should be a fun one for all of you pro folks. If you want to join the party, theoptionsinsider.com/pro. Get in there now. Get your name in the hat for the August Pro Trading Crate. Then we're back again next week, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.